published Financial System Stability Review 2025 in early this month. As per the Section 70 of the Central Bank Act, Central Bank is required to publish Financial Stability Review on or before 31st October of each year. Financial Stability Review 2025 contains development in financial system, risk and vulnerabilities in the financial system, and policy measures taken by central bank and other regulatory institutions in addressing such risk. This publication primarily covers data up to end June 2025. The market sections are updated up to end August. And Financial Stability Review 2025 consists of executive summary and 5 chapters on macrofinancial conditions, financial markets, financial institutions, households and corporate sector, and policies implemented by the central bank to maintaining financial stability. And there are 3 special notes relating to financial system stability. First, starting from the key messages of the publication. Banking sector and non-bank financial institution sector showed improved stability in first half of 2025. This was supported by macroeconomic recovery, strong profitability, and adequate capital and liquidity buffers. And private sector credit grew significantly. This was driven by household sector as well as corporate sector. However, widening credit gap, we observe widening credit gap. This signals potential systemic risk that require close monitoring. And stage 3 loan ratio are in a declining trend, but it's at elevated level. It's above the pre-crisis level, and this highlights need for continued vigilance and provisioning. And central bank also implemented macroprudential policies and also other policies to strengthen governance of the financial institution, and also improved consumer protection, and also launched Sustainable Finance Roadmap 2.0 during the reference period. And continued macroeconomic recovery and fiscal consolidations are expected to support stability, but there are downside risks remain, particularly in form of external sector developments. I'll take you through the macrofinancial conditions now. Total credit growth of regulated entities gathered pace during the first half of 2025 after a period of subdued performance. And credit growth of banks and finance company sector recorded 14% by end of second quarter of 2025. This was led by the banking sector, and finance company sector also recorded significant credit expansion. And we also observe the private sector credit to GDP gap continued widening. This suggests need for continuous monitoring of any build-up of systemic risk in the system. And moderation of credit to public sector has created additional space for private sector credit to grow. And financial intermediation is also gradually recovering, as reflected by the credit to deposit ratio of the banking sector, with improved credit expansion. And according to the surveys conducted by the central bank, both banks' willingness to lend as well as demand for loans increased in first half of 2025. And financial institution sector exposure shifted away from the government and public corporations. The share fell to 46.5% by end of June 2025 compared to 53.2% recorded in July 2023. This share of private sector credit has been increasing since mid 2023, but still remain below the pre-pandemic level. Moving to the financial markets, share price indices of Colombo Stock Exchange registered notable growth during the first half of 2025, and we also observe intermittent decline attributed to geopolitical uncertainties as well as the broader global macroeconomic uncertainties. And volatility of the share price indices also remain elevated in this year compared to 2024. And net foreign outflows were observed in 2025. And this highlight the need for attracting foreign investment to achieve the growth in the market. And yields on government securities decline with accommodative monetary policy stance and improved fiscal performance. The availability of buffer funds also contributed to stabilize the yields on government securities. And investor preference shifted towards the larger maturities of the government securities. And further, outstanding stock of rupee treasury bond marginally increased during the reference period. And on to the financial institution sector. First, look into the banking sector. And in banking sector recorded 11.4% credit growth in second quarter of 2025 compared to 4.8% growth recorded in second quarter of 2024. The credit of the banking sector was mainly concentrated into 6 sectors: consumption, construction, trade, manufacturing, agriculture, and infrastructure. We observe that marginal decline in this credit concentration. The credit concentration has come down from 74.1% to 71.7% at the end of second quarter of 2025. And stage 3 loan ratio of the banking sector marginally declined at end of second quarter of 2025 compared to 12.8% recorded in second quarter of 2024. This was mainly due to expansion in credit. And further, we observed the further decline in stage 3 loan ratio to 11.2% by end of September 2025. And the stage 3 loan ratio of DSIP is 12.8% above the industry average. And stage 3 loan ratio of other domestic banks and foreign banks at 10.8% and 2.7% respectively at end of second quarter of 2025. And stage 3 impairment coverage ratio also recorded improvement in second quarter of 2025. And banking sector also recorded significant growth in profit after tax. The growth rate was 67.8% for the first half of 2025. This was mainly driven by the net interest income of the sector. With this profitability increase, with this increase in profit after tax, profitability ratios of the banking sector improved in first half of 2025. And when we consider the capital adequacy of the sector, total capital adequacy ratio of the banking sector increased to 19.4% by end of second quarter of 2025 compared to 18% recorded in second quarter of 2024. This is mainly due to higher increase in regulatory capital compared to increase in risk-weighted assets. The regulatory capital of the banking sector increased with published retained earnings and also issuance of subordinated debentures by the banks. And moving to the finance company sector. In this, the finance company sector recorded significant growth of 35.1% in credit, and compared to the credit growth recorded in the credit growth of 11.4% recorded in second quarter of 2024. The stage 3 loan ratio of the sector declined to 8.3% in second quarter of 2025 compared to 13.6% growth recorded in second quarter of 2024. This was mainly due to significant increase in credit in the credit of the sector. And the return on equity, return on assets, and net interest margin of the finance company sector also significantly improved with significant increase in net interest income. However, the capital adequacy ratio of the sector declined to 22% by end of second quarter of 2025 compared to 23.8% reported at the end of second quarter of 2024. This was mainly due to increase in risk-weighted assets with substantial expansion in credit. Now I'll take you through the analysis on households and corporate sector. We collected, for this analysis, we collected data from Credit Information Bureau. According to the CRIB data, household sector credit expanded by 14.8% by end of second quarter of 2025 compared to moderate growth recorded in previous year. And banking sector continue to play a significant role in meeting borrowing needs of the household sector. Banking sector account for 64.7% of the total borrowings of the household sector. And NPL ratio of the household sector declined to 15% in second quarter of 2025 from 17.1% recorded in second quarter of 2024. This indicates improvement in credit quality. Here the NPL ratio is different from stage 3 loan ratio, different from the stage 3 loan ratio. Here the NPL ratio is based on the time bucket relating to past due dates of the loans, facilities and loans. And we also analyzed the performance of listed non-financial corporates of the Colombo Stock Exchange. Accordingly, net profit of the listed non-financial corporates expanded by 65.5% in first half of 2025 compared to 26.7% recorded in first half of 2024. And key financial performance indicators of the listed non-financial corporates also improved during the first half of 2025. And Central Bank also implemented a number of policies to maintain financial system stability. 5 licensed banks representing approximately 67% of market share were designated as DSIBs based on internationally accepted criteria. And Central Bank also revised loan-to-value ratio caps applicable for credit facilities granted against the motor vehicles in July 2025. And directions were issued on corporate governance for licensed banks with view of further strengthening the corporate governance processes and practices of licensed banks. And Central Bank also continued to extend target support to SME sector. And the Central Bank issued several directions aiming toward mitigating potential conflicts of interest and preventing the extension of more favorable treatment to related parties of licensed banks. And regulatory framework of finance companies was also further strengthened during the reference period. And Central Bank took various other measures in terms of payment and settlement, financial literacy, financial consumer protection, financial inclusion, resolution of financial institution, and AML-CFT initiatives to enhance stability of the financial system. And there are 3 special notes in this financial stability review. Special note 1 is on real estate market developments. And special note 2 is on systemic surveys conducted by the Central Bank. Time series data of the survey's findings are included in this special note 2. And special note 3 is on strengthening Sri Lanka's financial system resilience through resolution framework. And key policy changes and the regulatory actions implemented for the financial sector in 2025 is also included at the end of the publication. And Central Bank will continue to monitor and assess the stability of the financial sector within broader economic developments and take measures to implement proactive and timely policies in collaboration with relevant stakeholders to ensure continued stability of financial system, thereby facilitating an effective transmission of monetary policy, protecting savings of public, and supporting sustained high economic growth. The summary report of Financial System Stability 2025 is also available in Sinhala and Tamil languages. Thank you.